Imagine you are in Latin America. You open your phone, send money abroad in seconds, and no longer worry about inflation. For millions in Latin America, this is already a reality. Today, I take you to the epicenter of the new digital economy, how stablecoins, digital dollars, and other local tokens are reshaping everyday life, based on the latest on-chain data, institutional reports, and analysis from leading exchanges. In the US or Europe, crypto is often seen as an investment. In Latin America, it is about preserving the value of money and financial resilience. Over the past 3 years, inflation and local currency volatility have pushed millions to change their financial habits. The Milken Institute report points out that up to 90% of crypto activity in the region is now linked to stablecoins. Digital stablecoins pegged to the US dollar or local currencies which do not fluctuate like Bitcoin. Why stablecoins and not Bitcoin? Because here what matters is that money is digital and stable. By the end of July 2025, USDT, Tether, and USDC, USD coin, cryptocurrencies designed to always match the US dollar 1-to-1, make up more than 90% of all crypto transfers on the region's main exchanges. This marks a spectacular leap from 60% 3 years ago. This is not just a number, it signals that practical utility is surpassing speculative betting. Bitso, the largest exchange in the region, already has over 9 million users, a 12% increase since 2023, confirmed by their official report. These users and companies are not looking to get rich overnight, but to protect value, pay salaries, transfer money, and cover daily expenses using stablecoins. So how much has this grown? Crypto trading volume in Latin America reached $3 billion per month in 2025, recovering historic adoption levels and solidifying the region as one of the fastest growing markets according to Kaiko Research. But now, let's see. Brazil leads this revolution. The PAN News and Kaiko report shows that in July 2025, the volume of stablecoins pegged to the Brazilian real exceeded $900 million, double the previous year, and is on track to break the 1.5 billion mark by year end. And this is the reality. It's not just about digital dollars. Stablecoins pegged to the Mexican pesos, such as MXNB and MXNe, these stablecoins designed to maintain a fixed value, 1-to-1, parity with the peso MXN. 1 MXNB or 1 MXNe equals exactly to 1 Mexican peso, and it's backed by real peso reserves held by Mexican financial institutions to ensure stability. MXNB is issued by Juno, a subsidiary created by Bitso Business, the institutional arm of the leading cryptocurrency exchange in Latin America. Founded in 2025, Juno focuses on issuing and managing digital assets, especially stablecoins like MXNB linked to the Mexican peso. Juno's creation responds to the need to offer faster, more efficient, and cheaper solutions for cross-border payments and digital financial operations in Latin America, combining blockchain technology with fiduciary backing. Juno operates independently within the Bitso Group to guarantee transparency and security in the custody of funds backing the stablecoins it manages. It has also developed its own platform with APIs that allow companies and fintechs to quickly and easily integrate MXNB into their daily operations. Ben Reed is the director of the stablecoin strategy at Bitso Business and a leader within Juno, responsible for driving adoption and expansion of stablecoins in the region. Austin Ballard. Partnership Manager at Off-Chain Labs, the team behind Arbitrum, highlighted the technological alliance between Juno and Arbitrum to deploy MXNB on a scalable, low-cost blockchain. This is key for mass stablecoin adoption in Latin America. In short, Juno is the company created by Bitso Business to issue and manage stablecoins like MXNB, focused on efficient digital payments in Latin America, backed by specialized teams and key technology partners. Continuing, MXNB offers the stability of the Mexican peso with the advantages of blockchain technology. As mentioned, it is fully backed one-to-one by Mexican pesos held in Mexican banks, with audited reserves to maintain transparency. MXNB is compatible with blockchain networks like Arbitrum and Ethereum. MXNe, real MXN, is another stablecoin backed by Mexican pesos, issued by Braille in partnership with Etherfuse. It serves the similar purpose of providing secure and efficient access to the digital market linked to the peso's stable value. These stablecoins allow Mexican businesses and users to make payments, receive remittances, and operate in crypto without exposure to the usual volatility of other cryptos, enabling national and international payments that are much faster and cheaper than traditional systems. In summary, MXNB and MXNe are digital currencies that preserve the value of the Mexican pesos. Both enable compatibility between local financial systems and blockchain. They are backed by audited real peso reserve, and they facilitate fast, efficient, and stable transactions inside and outside Mexico. These initiatives are part of the explosive growth of stablecoin use in Latin America, with Mexico consolidating as a key player in this digital financial revolution. They've reached a market cap of $34 million in July alone, a more than 600-fold increase over the previous year, a growth rarely seen outside Latin America. Argentina, driven by chronic inflation that exceeded 220% in 2024, sees over 60% of crypto operations concentrated in stablecoins, according to Chainalysis and Bitso's Crypto Panorama in Latin America report. Venezuela and Brazil show similar dynamics due to local instability. But at the end of the day, what does this look like in practice? Today, stablecoins pay salaries, bills, groceries, and even family remittances. Remittance flows in Latin America now exceeded $140 billion annually, finding in stablecoins a fast and inexpensive way to reach their destination, according to Mural Pay and Diario Bitcoin reports. Who really uses stablecoins? Public surveys and direct exchange studies, such as recent Bitso data, show that most users no longer see this money as a speculative crypto, but as everyday currency, authentic digital dollars, a tool for survival, not just an investment. For example, a business owner in Brazil pays wages in USDC. An Argentine freelancer saves in stablecoins to avoid devaluation. A Colombian family receives instant remittances. I will keep covering this information as it develops, so make sure you subscribe. Thanks for watching. We break down digital regulation and innovation. Now is the time to observe, learn, and take action. The opportunities are on the table, and the clock is already clicking. Until the next one.